Let's talk something that we can't avoid. Taxes.
Oh, yeah. All right, so let's bring on Gemma, and Gemma is from Solo.
Hello.
Hello.
Hi.
Hi, Gemma.
Thanks so much for having me on today's Show Me the Money Club. My name is Gemma, and I'm a growth manager here at Solo. For those that are not familiar with Solo, we are a mobile app that aims to make managing gig work much easier. We know that working for yourself can come with a lot of great flexibility and many options for ways to work and earn income, but we also know that with that comes a lot of challenges and unpredictability. So Solo aims to enable you as the worker to keep that flexibility you love while also making it easier for you to juggle multiple jobs, hit your earnings goals, and also manage some of the administrative aspects of gig work, like tracking your own income, automatically tracking your own miles, tracking other expenses, and also filing your taxes within one app. So like Sergio and Chris mentioned, taxes are due in just a few weeks. And we know from our users that it can be overwhelming to know where and when to start and what you need to know as you're filing as a 1099 worker. So I'm really excited and honored to be joined today by Yeahwon and Janet from Column Tax. Column Tax is Solo's tax partner, and they're here to answer some questions about tax filing as experts in the field. So we'd love to bring them on too.
Yep. So
Yep.
let's bring on Janet and Yeahwon. Thank you for coming on. Appreciate that.
Thanks.
Hey, everybody. How's it going? Thank you for doing this. Really, I mean, I think it's important, especially a couple of weeks before tax time. We can get away from death and taxes, right? Is that what they say? So in this case, taxes. Let's, to start with, Gemma eloquently explained the relationship between Solo and, Solo is one of my favorite apps. I have it on my phone. They also offer some guarantees for the hourly work that you're putting in. If you don't make it, they will make it up to you. But how many drivers you have on your systems now? Close to a couple 100,000, Gemma?
Yes, exactly.
Yeah, there you go. So the partnership obviously is a credible one between Column Tax and Solo. So we're here to answer questions if you guys have questions, but we'll start the conversation with Yeahwon and Janet. Have them talk a little bit about independent contractors, taxes, what they should do, and then we'll get more into the details of deductions, but it's their area of expertise, so I'm going to let them talk. And so go ahead, you two, introduce yourselves, and then we'll get into it.
I can get started. My name is Janet Bracey. I'm CPA. I work here as a tax analyst with Column Tax, and not to go too much into detail, but tax analyst is kind of a combination of an accountant plus an engineer. We kind of help build the software that Solo is using so you can file your taxes with them. And I've been here about 2 years, and it's been a good experience so far.
Hi, my name is Yeahwon Lee, and I joined Column Tax back in September, and I'm also a tax analyst and a CPA. Happy to be here.
There you go. So, W-2s are different. The way we file taxes, are different. But let's talk a little bit about what you're seeing as far as trends are concerned, as far as independent contractors are concerned, right? For myself, I get all my 1099s from all the different gig apps, which could be confusing just to read them, and in its own is a chore, is an ordeal. But that's why Solo comes in and it breaks down everything for you guys. But so I get my 1099s, I take him to my CPA, and then he does my taxes. But not everybody may go to a CPA. So what advice would you give people who are multi-apping like me, who are I'm literally on 8 different apps because that's the only way I can make money these days. I can't be on one. So what advice in general would you give 1099ers like myself?
So I'll start. Generally, it depends on kind of what area or industry you're in. So we're going to use gig workers, for example. Let's say you're for both Lyft and Uber riding, or excuse me. So you're working for both Uber and Lyft, and you get 1099s for both. You take them to your accountant. What do I do with these? They're going to generally group them into one because it's kind of related. So since it's all ride sharing apps type services, it'll go all into one Schedule C is what we'll call it. And that's generally what we recommend. If you have, let's say, ride sharing, you do DoorDash or Uber Eats or Instacart, all of that, you can kind of consolidate those into one business because they share a common theme. But if you're a handyman, let's say on the side and do work for that, but then also do Uber Lyfts, those are considered two separate type businesses. So you kind of want to divide those into two filings or two Schedule Cs on your tax return.
Okay. Do you have anything to add, Yeahwon?
Yeah, just to add to that, the reason why is because whenever you file a Schedule C, you have to indicate what type of industry or business that business you're claiming on that Schedule C belongs to. So if
Okay.
they're all different businesses, you're going to have to file multiple Schedule Cs.
Okay. Obviously, a lot of us as gig workers, right? Our channel is made up of gig workers. I personally take the 67 cent this year, 67 cents, I believe, is the IRS standard mileage deduction, right? But let's talk a little bit about that. Let's talk a little bit about the differences of how you can file taxes by taking that deduction or itemizing your deductions. So whoever wants to take that on, let's talk a few minutes about that.
Okay, I'll take it. So you have the standard, which he says the 67 cent for 2024. For 2023, if you haven't filed your taxes yet, 65.5 cents. But let's start from the beginning. Let's say you have a car, driving for Uber. If you own that car, you can take the mileage on it, or you can take what we call actual expenses or itemized expenses. So let's say you're paying for gas, you're paying for tolls, rental car fees, things like that. You have the option of determining which of those deductions is the best. We'll give you like the best bang for your buck, for lack of a better word. So there's a catch. If you are renting a car and say using that for Uber or Lyft, you cannot take the mileage deduction for those. You have to take the actual expenses, which will be all of your rental fees, gas, tolls, and things of that nature. But if you own the car, and let's say you drive 10,000 or 10,000 miles a year for business, that's a 6,500 deduction for 2023. So that might be better to take that instead of your actual expenses, which may be like $2,000, $3,000.
So do you run, let's say, both versions for somebody and then figure out which more, like you said, more bang for their buck? Is that what you do?
Yeah, typically any software that you use, they're going to ask you a series of questions, kind of like an accountant would do. How many miles did you drive this year? Okay, what expenses did you actually pay for the fees and things like that? Or if you're an Uber Lyft driver and you get a tax statement, you can have that information ready. But then all that information is entered in, and then the two are calculated and compared. And whichever one we feel gives you the better benefit, that's the one that we're going to default to. You do have an option to use the other if you don't prefer to, get all of your tax dollars back, but we generally give you the one that's better benefited.
Okay. I know for a fact that in our community, a lot of people rent, like you mentioned before. So just to reiterate that, if you're renting to do rideshare or gig work, you can only deduct the rental cost, monthly, let's say, or weekly rental cost, correct?
Correct.
And your gas and can you deduct your cell phone expenses?
You can.
Okay.
And it's when it determines if you're trying to determine if you can take the miles or not, the one thing I think about is who owns the car. That's generally the person that can take the mileage offhand.
Okay.
But if you have things like cell phones, you buy, let's say if Uber again, you buy drinks to put in the car for the people that ride with you, or cell phone chargers, things like that. You can take those as a expense if you're using it strictly for business. Now, if you're using it to charge your own cell phone for personal reasons, you cannot deduct it for that.
Okay, there are a couple of questions. Let's take those before I forget, before the chat flies away. One question is, discuss the difference between 1099 personal as it adds to your personal and bracket versus LLC. Is that clear? Because it's not clear to me, but it's probably clear to you guys. If we can answer that.
So there's two types of, I want to say, businesses. You have the sole proprietorship, which I think of as personal. That's the Schedule C. And then you have a limited liability company, LLC. The main difference between those two is the protection. So if you're doing just side work and things like that, you can just file a Schedule C on your personal return and be done. There's not really a difference or tax bracket between the two. It's more of how you're treated, either as a individual business where you file, I want to say, papers with the state, or you're just going to file a Schedule C on your personal return. You don't have to do any paperwork. And so if you're a sole proprietor or personal, doing a personal business, just doing, gig work, not really thinking of it as a business, then you can file the Schedule C. But if you think you're going to be in business for years and want to, add on another owner or something like that, then you may want to do an LLC. An LLC is basically a separate business from you. So there's like a veil. When you file an LLC paperwork with the state, anyone that tries to come after you, like a lawsuit or something, they can only come after your LLC business. They can't come after your personal items. So
okay, so it's for more liability purposes as opposed to deductions or extra deductions and things like that, right? Okay. Yeah. So let's answer this one. If I have an LLC, which is better? For me as an employee of my LLC, like a lot of, first of all, there's like many different platforms in gig work, right? Or in rideshare. So there's Uber X, which is the lowest end. And then there's all the way up to Uber Black, which is the limousines and Suburbans and things like that. And most of those, Uber does require the driver to carry their own commercial insurance and have an LLC. And in this question, if I have an LLC, which is better for me as an employee of my LLC to pay for the gas and have the company reimburse me, or just have the company to pay for the gas? That's a question. I don't know.
I would have to ask first whether that LLC is really a single member LLC. If you were the only employee of your LLC, you are taxed the same as whether you file a sole proprietorship. At the end of the day, you're filing a Schedule C to claim any income and expenses for your business.
Okay. While I'm looking at the chat, so as a gig worker, I got, I think, 4 or 5 1099s this year, right? One thing with these companies is that a lot of our community complains that what they're actually showing on the, and I'm sure you have seen some of those 1099s, right? From Uber, from Lyft, what they're actually telling us is not accurate, right? What it is that what they'll do is they'll put on one column, they'll put the total passenger, what the rider paid, right? And then they put their commission. So let's talk a little bit about the relationship, because I get asked that question a lot. A lot of drivers think what they see as the aggregate passenger pay is not matching their bank deposits, right? But I always tell them, you have to take the commissions, which is in the second column, deduct that. Those are all your deductions. Let's talk a little bit about the relationship of those two columns.
Yeah, I think so. Generally, when they send you the 1099 miss or NEC form, it's going to include the gross. So it's going to include everything. And that could be what the riders paid up front. Everything's included in that number. But they usually will give you a statement or something that really breaks down deductions. And that's the amount that you would generally need to subtract on your Schedule C as business expenses. So maybe it showed like $50,000, and you know for sure your bank statement does not have, your bank account does not have $50,000 in it, but that's just an aggregate amount, which then they should have provided you with another breakdown number of, here's like fees that we took out to pay ourselves and things of that nature, which you can then use as a business expense to bring it down to the actual number you know you got into your bank account.
Right. The other question I get a lot from the drivers is that Uber and Lyft or DoorDash also put mileage in there, right? Because they figure out this is your mileage, and that never matches either, right? So what would you suggest for drivers to do? Take what it is on the 1099, or keep track of their own miles through like an app like Solo or some other app? What would you guys suggest the drivers should do?
It's definitely best to keep track of all your expenses as detailed as you can, and you have apps and from providers like Solo that will help you keep track. Jana, you have any feedback?
Yeah, I agree. I mean, I personally have a schedule sheet myself, and I use an app to track everything. I don't want to say I don't trust the company that's preparing it, but they may make a mistake. And so if I have my accurate records, I can then refute the statement they gave me or make adjustments that I know I need to make on my own.
Yeah, you guys are familiar, I'm sure, with period 1, period 2, period 3. Period 1 is a rideshare driver with their app on, waiting for a request, right? Or driving around, right? Period 2 is they accepted the request on their way to pick up the passenger, and period 3 is with the butt in the back seat, right? So are all those 3 periods, as far as deductions are concerned, or the standard mileage deduction is concerned, are they could they be deducted, all those miles?
That's an interesting question. Let's see. I think it depends on like when you actually are starting. But I don't know the exact answer to that, but I can definitely research it and then follow up with an answer.
Okay. All right. Because that happens quite a bit. Like, okay, so let's say I live in the suburbs, I leave my house, right? And as soon as before I get out of the garage, I turn my app on. And then I drive 10 miles to get somewhere that's busy. Are those 10 miles deductible, let's say? Because my app is on, right?
Right. Exactly.
Okay. All right. So yeah,
Well,
look into
depends on
that.
the IRS and what they consider, they have some exceptions.
Expenses, right? Business expense, right? Because I'm driving, it's a business expense, I guess. So let's see if we have any other questions. Oh, one other question that actually some viewer tweeted me is that supposedly if a lot of high-end platform drivers such as Uber Black, Lyft Black, they have cars that are over 6,000 pounds, right? Like a Suburban. So I don't know this, so that's why I'm asking. He said, can you ask them the question? If a car is over 6,000 pounds, supposedly you can write off the whole thing the first year. And then he sold the car. He goes, if I buy one next year, can I write off that whole thing again? And I wasn't sure. So do you guys know anything about that? Because I see in my neighborhood, a lot of Armenians drive G-Wagons. I think they're because the whole thing is deductible. I guess that's why they do it. I don't know.
Yeah, I think I would be careful with it. There are some exceptions when it's over 6,000 pounds. It might be reduced. There are some laws around that. I don't know the exact numbers. If you're going to buy one and expense it all in 1 year, just be careful when you sell it, because you may actually have to, what we call recapture, add that back as income on your taxes. So you're not really getting away with getting a full deduction 1 year, and you sell the next year, you may have to end up paying taxes back on that sale.
Okay. All right. So that question is answered. Let's see. If we have any other questions, do you see any, Chris? All right. So if there isn't any, we'll do this. Give us some suggestions, seriously, like as gig workers or rideshare drivers or delivery drivers, right? Give us some good advice. We're here to listen to you. You're the experts. And how should we do it? I mean, I know get your paperwork ready, get all your deductions ready. But what other advice can you give our audience for people who are watching now and are going to watch later by the thousands?
I guess another deduction that we didn't mention yet that some people may not be aware of. For self-employed individuals, there's something called the qualified business income deduction, which you can take a deduction up to 20% of your net income earned during the year. And there are other limitations. There's like an income phase out, but that is another deduction that you may want to look out for if it's not already on your return.
Well, actually, one thing I just remembered. So there is self-employment tax. We're all self-employed according to the IRS, right? 1099.
Yes.
What is that tax? What's the percentage of that tax? Does that have to be paid quarterly, yearly? How does that work? Talk a little bit about that.
Yeah, so the self-employment tax rate is 15.3%, and it's different from your, or you can actually take the deduction of half of that amount in calculating your individual income tax.
Okay.
And generally, as a gig worker, if you're not getting withholdings on your 1099, you may also be required to pay quarterly estimated payments.
Okay. So look, a lot of drivers that I talk to, either their budgeting is bad or their expenses are too high. They don't save for taxes. So what should they do? I mean, like, if they gross $1,000 a week, should they automatically take $150, put it in another account for taxes? Is that what they should do, Yeahwon?
Yeah, I think you can utilize tools, and maybe Gemma wants to talk more about the things that Solo can provide to help you better estimate when you should be making your quarterly payments.
Okay, let's talk about that, Gemma.
Yes, so Solo offers a tax, not only tax filing, but also yearly tax projection feature as well. So as we track, your deductible mileage from your work activity and add that into the app, we'll actually show you a breakdown of your gross income or your gross earnings and also your net earnings. So taking out those deductible expenses from your gross. And then on our tax screen as well, we also show you kind of projected amounts that you are potentially could owe, just as an estimate to kind of give workers an idea of how much they should be setting aside for or planning for throughout the year to make, April 15th a little bit easier on the wallet if you do end up owing. So that feature is available year round too, and kind of helps you just plan for the future.
Okay. Here's one question. Is the mileage deduction unlimited year after year, or is it up to the value of your car?
You can take the mileage year after year, so it doesn't depend on the value of your car. So if you
Okay, so
drive,
you could have a beater and drive 80,000 miles this year and take all the deduction. Okay, I love that. Okay, that's why I don't know too many rideshare drivers who pay taxes. Here's a good question. How about the difference between vehicle insurance? Can you deduct the difference between personal use insurance and using vehicles for work? So a lot of drivers that we're educating did not know that during period one, whatever Uber and Lyft offer them as far as insurance is concerned is garbage. It doesn't cover them. So that's why we tell them always go buy a rideshare rider or rideshare, extra insurance, right? So maybe he's talking about that. Is that deductible as well? Because I have my personal insurance, liability, comp, and collision, but now I go buy an additional policy to cover me for period one and rideshare. I think this pertains to that.
I would say if it's strictly for the ride sharing business, it would be deductible. But if it's kind of blended in with your personal insurance, then you may want to kind of calculate a percentage of how much time you used your car for personal versus business, and then just take a percentage of that amount.
And
Okay.
that also be how keeping track of your miles comes in. So if you know how many miles you drove for your business divided by your total miles driven with that car, you could multiply that percentage by your car insurance amount.
Okay. So William says, do you count depreciation of vehicle or on itemized expenses?
You do. That is the route you're taking. So if you're taking standard, no depreciation. But if you're taking the itemized expenses, then depreciation is one of those expenses you can take, and it's included in that value.
Okay. And I'm assuming last year was 65.5 cents, right? So we were filing taxes with 65.5 cent mile deduction this year, right?
Correct. Yes.
Okay. Interest you pay on your car is also tax deductible. Is that a question or a comment? I don't know.
It is. It is deductible as one of those itemized expenses.
Okay. So let's give our audience, some parting words. But besides that, you know what? Let's do this. If we are not going with the standard mileage deduction, okay, we're going with the itemized one. I mean, most people I know are using the, the flat 65.5 cents, because I think in most cases, I think it's more beneficial to them, especially if you have an older car that's depreciated already, then just lower your taxes more. But if you have give us an idea about, if I have a newer car, right, which one is more beneficial for me? Should I do itemized deductions, take it piece by piece, or should I take the mileage deduction?
I would say it depends on how much you're going to drive or plan to driving.
Well, okay, an average, let me tell you this, an average full-time Uber driver drives 5,000 to 6,000 miles a month.
Okay. I almost want to pull out my 10 key, but I won't do that. If you're driving that much and you just bought a new car, I would say the standard mileage is probably more beneficial. You own the car though, so the depreciation is higher. That's when the software can really calculate the difference between the two to see which one is going to be best. But if you're driving that much and it's 65.5 cents per mile, let's say for this year, I would probably say go with the standard mileage. That's going to reduce your income less, so you probably won't owe any taxes.
Okay.
And when in doubt, just again, keep all those receipts, keep track of all your expenses, because who knows at the end of the year what may give you the greater deduction at the end of the day.
Okay, so there's a question comment. How much do you charge for your services for back taxes doing rideshare? I'm in California here. That I cannot answer, but buddy Steve, you can go to the show notes on the, both their solos and column taxes links are there. You can follow that up from there. Okay, let's put this one up as the last question. Do you lose a huge advantage by renting over owning the car, as far as taxes are concerned, I'm assuming? Rentals, by the way, run about $500 a week. So
yeah, I would say then just save up to buy the car, and then you can take as much mileage as you want. Okay. That would be, my advice.
Okay. All right, cool. So give us some parting words, give us some advice, give our audience, I'm pretty sure we covered everything because those are the questions I saw, but if you have other questions, so I guess, as I said, both the links for Solo, which is one of my favorite apps, is in the show notes, and as well as column tax. If you have questions, please go click on the links, educate yourselves, or ask them, send them an email, or you can send them to me, Sergio at RideShareGuy.com. I'll just forward it to them. I'm not a tax expert, they are. So, a couple of minutes each, give us some advice. All right, Gemma, I'll start with you.
Yeah, thank you so much. It's been great chatting with you all, and thank you again, Yeahwon and Janet, for joining us. You can use the link in the description as well to sign up for Solo. I will say that our tax services are still happening, and you can file for a flat fee of $50 if you're not a Solo subscriber already. If you are, it ranges from $30 as a flat fee or free if you're a Pro or Pro Plus subscriber. So feel free to download the Solo app through that link and you can get started. And then feel free to email us as well at info@worksolo.com if there are any questions about the Solo app or our partnership with Column Tax. Thanks again.
There you go. That's Gemma from Solo. Thank you for showing up. Much appreciated. And Janet?
Yeah, Schedule C, sole proprietorships, gig workers, all that. It seems hard at the end of the day, but I would just say from accounting experience, as long as you've got everything tracked, even if you use an app to do that, that's better than not doing anything at all. As far as estimates, that's probably the number one thing I've seen is people have to pay because they didn't know they had to pay estimated taxes quarterly. One of the things I do, and I'm not advertising this, but with my Schedule C, when I get paid, I put a percentage of it into a savings account. It earns money while I'm still working, so that when it's time to pay taxes, I can pay my taxes and still have interest earned. So money still
you're not scrambling at the end of the year to pay taxes.
Right.
And last but not least, Yeahwon.
Yeah, I'm in agreement with Janet. And I guess one last tip I could offer as well is if you happen to receive like a lot of income this year or like this tax year compared to the prior years, and you're worried about any penalties or that may accrue when you file your return, you can always follow the safe harbor rule, which is paying 100% or 110% of prior year's tax liability to ensure that you're not going to be paying those penalties when you file your tax return. You can check the IRS website for more details. The 110 versus 110% distinction is based on the income level you are at. But yeah, that's all.
All right, there you go. People, advice. Again, both links for solo and column tax are in the show notes. Please go visit their website. If you have questions, you can send them to me, Sergio at RideShareGuy.com. I'll forward it to Gemma, Janet, or Yeahwon. And, much appreciated. Thank you for showing up. I know it's not enough time, but we tried to enter as many as we could, and we have limited time. So, much appreciated. Thank you.
Thank you.
Thank you.
All right, thanks for watching. That short little clip was from our live stream, Show Me the Money Club with Sergio and myself, Tuesdays, 6 p.m. Eastern, 3 p.m. Pacific. Make sure you subscribe, turn on all notifications so you'll be notified when we go live, as well as all of our awesome content. Make sure to check out this video right here, which will take you to the entire live stream, or check out this video right there. All right, drive smart, everyone.